there, traders and friends right around the world. It is James here on behalf of Pivot Point Trading, bringing you a special Wednesday afternoon market recap. I didn't speak about the markets on the Monday or Tuesday. The reason why largely is because the markets haven't done all too much. If we zoom in on the detail of the Dow Jones Industrial Average, what we have is really a formation of three spinning top candles. And what this is really reflecting once again at this macro pivot point, this very important resistance level, is that we're still seeing continued indecision, not only on the Dow Jones, but also on the S&P 500. Yes, we have pushed to another high on the Dow Jones. We have pushed above that March 2015 high, but we haven't closed and pushed above that 18,370 trade trigger on this particular market. The same is happening on the S&P 500. Again, we have pushed above the February and March 2015 high, but we're seeing those high wave spinning top candlesticks at this particular market or on this particular market. What we spoke about over the weekend in Pro, I'll just run through a few major points because, again, we haven't confirmed either of these points at the moment. Point number one is that we wanted to see all three of the US markets in agreement. Now, we haven't got that. I'm going to put a big red cross on my screen right now because if I zoom on over and flick on over to the NASDAQ, you can see right here we haven't essentially broken above the high established in late April 2015. You can see this swing high over here. And the NASDAQ itself is still failing to push above this. Not only that, but this particular market hasn't broken above the all-time highs. The Dow Jones and the S&P 500 have achieved this, but the NASDAQ, you can see here, this red line on my screen is the 2000.com bubble, around 5,137. That was the intraday volatility high, going back to the beginning of the millennium or the start of the millennium, and we're yet to cross above this level. Until all markets do push above their all-time highs, I really am sitting here very cautious on the overall markets. I want to make sure that all three of these markets are in agreement. If we have a look at some of the big players across the US markets, we have a look at the Apples and the Googles and the Amazons, you can see once again they're failing to push this market higher. They're not leading from the front, which is also a little bit worrying at this particular moment in time. There's a lot of, media speculation going on that these markets are really healthy. It's a great time to be putting your money to work in the market itself. But when you have a look at the weakness across these stocks, again, look at Amazon failing to secure a bid, really just pulling back into this, most recent low established in early May. And when we have a look at Google again, I mean, it's nowhere near the most recent swing highs. Going back to really the triple top or the type of channel consolidation which is going on, you can just see that there is a little bit of weakness going on across all of these major stocks. Now, what I've done also in the past is that I've included an update, and I've spoken about this in Pro again in great detail, in regards to the Dow Jones Industrial Average versus the actual transportation index itself. I put out a video on YouTube. You can go back and have a look. It might be about a week old. I'm not entirely sure how long ago I did do that. It is under 2 weeks old at least. If I can bring up the Dow Jones Transportation Average, because again, it's a really good opportunity to sit down with you and just show you what I'm seeing on the Dow Jones Transportation Average. If we can just delete this and bring up the right chart itself, DGATA, and I'll change the particular top chart to the line chart as well, or the closing price. You can see here that we are seeing continued divergence. I referenced this again 2 weeks ago. The Dow Jones is still trying its best to push higher. It hasn't seen that true breakout yet, but the Dow Jones Transportation Average is really selling off. If I can just bring up this particular market, really just to highlight the candlesticks which have occurred this week, Dow Jones Transportation Average, here we go. You can see even on Tuesday and Wednesday, we're seeing again continued selling pressure coming in where you'd expect buying pressure to show up. We are at a support level. We have been in this channel type of pattern even before the Dow Jones Industrial Average itself got into the same or similar type of pattern. Really the explanation between these two markets goes something like this, or it goes very close to this. In the past, now it hasn't been true most recently or as correctively as it has in the past, up until really, again, the turn of millennium, this has really worked much, much better. But the theory goes that if the transports aren't moving goods, right? If the manufacturers are producing goods, but they aren't being shipped, i.e. you're seeing a slowdown in the transportation of manufactured goods, it's only a matter of time until that is actually confirmed or at least established in the actual industrial average itself. So what we're seeing right now is really a forward-looking indication of what may be once again around the corner on the industrial market itself. You can see right here, it's selling off. I put these two tentative triggers right here. I didn't really place too much emphasis on them. It was really a bracket trade, but really just highlighting the fact that we are seeing that divergence, which has happened since mid-March 2015. Again, it's playing out. We were down 170 points on the transportation average. So we are seeing a slowdown in this particular market. And more times than not, I'd say about 80% or higher, the industrial average, which is more widely followed, is late to the party. It generally follows the transports, especially when you get into these distributional type of phases across big market indices. So please keep attention to the transports and the industrials. They will come together, or they will join once again into the future. It hasn't, or doesn't look as if that's actually going to occur anytime soon, unless we see either a big push in the transports higher off from the support level, or in fact, we've got the industrials up at resistance right now, and we see a very quick move to the downside. That's really what I'm expecting to occur in one of these two markets. We'll soon see which one of those actually plays out. So to go into more sort of an individual trade update, Apple really hasn't done a lot. We came into the week very neutral on Apple. We didn't necessarily have an immediate trade outlook, and as you can see, it's really just plateauing right around this middle of the channel. You can see we've got support here and resistance up the top. We're right in the middle. It's what we call no man's land. So really not a lot to take away from Apple at this particular moment in time. I've referenced Amazon. A lot of these other stocks which we follow have really made the move higher, and they're looking quite weak. We're sort of at that top peaking type of area or zone where we expect some really good shorts, which really align very well with this market if in fact we get a rejection from this resistance level. To make this very easy, here we are, we're at speculation heights or speculative heights. We're at the breakout zone, and a lot of our individual trades aren't really poised for, really big bullish moves outside of the fact that yes, Tesla may push higher. It has come back down very close to our 243.63 entry, and Netflix, which went on an absolute tear last week, is sort of just slowing down again. I mean, it was up $5 today, but discounting yesterday's candle, it's been quite a flat week. These are the most bullish stocks, and yes, you can make the argument that they are in bullish types of trends, but the majority of these other stocks which we follow again are either range bound or they're poised to make that rollover type of move. So you can see at least my thoughts for the markets. It is a Wednesday, my apologies, but once again, Monday and Tuesday, we haven't really seen any of the things play out which we've spoken about in pro over the most recent weekend. Again, if you're undecided, or if the markets are still very neutral, they're undecided in the at least immediate direction or short-term movement, it's best just to sit in cash and wait for the best opportunity to selectively hop into trades once the market gives us some very clear signals which direction it wants to go. Again, we haven't seen the definitive break. It will happen soon enough. We are at a very macro pivot point, which is very exciting in and of itself, but the way in which this is trickling through to individual stocks, you have to remain very neutral and very selective in your approach to getting into some really nice swing trades. That's it for this Wednesday afternoon. Pay attention to the Dow Jones Transportation Average. Very important divergence which is going on from the industrial market. As you can see right here, we're pushing up into the resistance level, whereas the transports would be down in this location right here, breaking below support. Very important market move taking place. That is something which isn't getting any media traction. No one's really referencing the divergence taking place. I have seen a few articles, however, trickle through most recently, but again, it's one of the most important relationships in the market, and it really goes into Dow theory in true market form. These markets on face value are looking somewhat strong. Again, the media is beating up the actual price action, saying that, look, everything's okay. It's a great time to be at least entering into the market long, but you really need to be cautious at this particular level. Please take that away from this particular Wednesday afternoon market recap. Friends and traders around the world, if you have any questions whatsoever, I've been on the phone constantly with a lot of people around the world, and I'm happy to do that, but at the same time, it's taking me a little bit longer to get back to email inquiries. So, I mean, I think it has been more or less 24 hours past, the date of receival of those emails, which I'm actually, getting back. I'm still working through a backlog. So my apologies on that, but I'm doing my best to attend to everyone's questions, everyone's concerns, and to be as, neutral to everybody who I have contact with. So please take that for what it's worth. I think that's all I needed to cover on this particular Wednesday afternoon market recap. Have a look at that pro class. Go through, again, the analysis which I walked through, because it's really playing out to a T at this particular location on the chart where we're trading at, and how it's also, again, making its way through to these individual stocks. Not a lot of opportunity in the way of immediate swing trades, but what that means is that they're developing, and we will harvest the next crop of trades when they present themselves, which may, in fact, either be Thursday or Friday this particular week if we see a really strong breakout or a very strong reversal candlestick on any of these particular markets. Other than that, have a great Wednesday afternoon, everybody. I'll be with you again this weekend in the Pro Analysis class. It is a recorded class, and it is online still from the most recent week. And I think there's also a backlog of about 4 or 5 other classes going back even into April. So have a look at that market analysis and individual trade analysis. Have a great evening. I'll leave it at that. Goodbye.